Welcome to the Real Estate Guys radio program. I'm your host, Robert Helms. We've got some breaking news this week. If you're a real estate investor or business owner or syndicator, there's a new law enacted that you'll need to know about. It's not an exciting topic, but it is a critical one, and we've got a great guest today on the Real Estate Guys radio program.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome to the Real Estate Guys radio show. I'm your host, Robert Helms, and with me, as usual, co-host financial strategist Russell Gray.
Hey, Robert.
I'd love to tell you we have some awesome news for you today, but instead we have kind of some breaking news about something that's been around a while but starting to rear its ugly head, and we have an attorney to help share. But before we do that, let's set the table a little bit, Russ.
Yeah, so this is really part of a much bigger movement that has me personally very concerned, and you may or may not be concerned, but I tend to like my privacy. I look at the Constitution, and I have a Fourth Amendment right to privacy in my financial affairs, in my papers, and my documents, if you really read it and look at that. And in the name of fighting terrorism and whatever else, there's a lot of laws that have been passed, and really the big sea change took place in the Patriot Act back after 9/11.
Yeah.
The idea that these terrorists had the ability to fund their activities through the banking system, and therefore the banking system had to go from being kind of free and private to being highly regulated and monitored. Well, there were some other areas in the system that allowed you to have some privacy. And one of them was the way you set up your entities. You could set entities up in privacy jurisdictions using nominee officers and directors, and it was just a way for a person who had wealth, maybe somebody had a higher profile and was wealthy, to avoid people looking in their business and seeing what they own and how much money they make and if they're a good target to be sued. And in a highly litigious society, privacy is actually an asset protection strategy. Well, it turns out that the people who run the system don't like that level of privacy, right. And so they set these things in motion, and then they roll them out. In the beginning, you take a little bit of it, about as much as the marketplace will handle, and then you kind of put the rest as like a sleeper cell, and it sits there, and then later on they kind of add it. Well, this is what's happened in this type of thing, where down the road, many years after the Patriot Act, this thing comes out now that is going to take away some of your corporate privacy. And it's all in the name of safety and anti-money laundering. And, you know, you may or may not be for that, and I'm not here to wax political. Yeah. I have my own preferences. But at the end of the day, you should be aware, because it does change ultimately your responsibilities. Of course, when you get to the nuts and bolts, this is where you have to bring your attorneys in. And so we're going to bring one in for you, and who's going to explain to you what's going on here.
Yeah, the Corporate Transparency Act was actually enacted back in 2021 to allegedly enhance transparency in entity structures and the ownership thereof, as really a way to combat money laundering and tax fraud and other illicit activities. So specifically, it's designed to capture more information about the ownership of specific entities that are operating or accessing the U.S. market. But starting January 1st, 2024, the act is likely to affect you if you have an entity, if you own a company, if you raise capital, or if you use LLCs or partnerships to hold your real estate by yourself or with partners. When we come back, we'll say hello to securities attorney Mauricio Rauld, and he'll share with us what you need to know, whether you already have a legal entity or you're planning to form one in the new year. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Need help with your real estate investment portfolio? Check out the resources page at realestateguysradio.com.
In uncertain times like this, it's great to know there are two things you can always count on: high demand for affordable single-family homes to live in, and Terry Kerr's amazing Memphis team at Mid-South Home Buyers to find, fix, and manage the next addition to your recession-resistant real estate portfolio. The Memphis market is logistics and distribution dynamo with an economic engine that's essential to moving goods and critical supplies all over the United States. Quality rehab, proven profitable property management, affordable rents, and solid ROI make turnkey property investing through Terry's team a dream when it matters most. To learn more about Memphis and Mid-South Home Buyers, send an email to midsouth@realestateguysradio.com. That's midsouth@realestateguysradio.com.
Self-storage is an asset class that has stood the test of time. Going into the Great Recession of 2008, self-storage had the least negative impact of any of its commercial real estate peers, and it had explosive growth coming out of that time during the recovery. Fast forward to 2020, and you'll see that same pattern during some of the worst part of the pandemic. Hi, my name is Dave Zook, founder and CEO of The Real Asset Investor. Our operating partners are some of the best in the business, and we've had great success over the last decade buying mom-and-pop operated self-storage facilities and taking them to the next level by forcing value through increasing the square footage, adding climate-controlled units, bringing in our professional management teams, and turning the project into an institutional target. We have self-storage investment opportunities available for accredited investors who are interested in investing in this space for cash flow, tax impact, and huge equity appreciation. Reach out to us today at selfstorage@realestateguysradio.com.
Hi, guys. My name is George Gammon from the Rebel Capitalist Show, and you are listening to the Real Estate Guys, my favorite podcast when it comes to macroeconomics and real estate investing.
Welcome back to the Real Estate Guys radio show, heard every weekend on this great radio station and all the time at realestateguysradio.com, and of course, your favorite podcast outlets. When the law changes, we need to be ready as real estate investors, and today we're going to talk about the Corporate Transparency Act and what that means to you. To help us do that, please welcome back to the Real Estate Guys radio program, attorney Mauricio Rauld. Hey, Mauricio.
Hey, buddy. How you doing? Good to see you again.
It's good to see you. It's usually good news when we get the chance to speak, but I'm not convinced this is great news. Let's start by just explaining what this is and why it's going to matter to real estate investors.
Yeah, so this is called the Corporate Transparency Act, and this is a piece of legislation actually that passed a few years ago under the Trump administration. He actually tried to veto it, and it got overridden. But essentially, it's a way for the U.S. government to tackle terrorism, anti-money laundering, all of these sort of secrecy things that they believe exist because people are able to create entities without really revealing the true ownership of these LLCs or companies or corporations or what have you. And so this is meant to really puncture through that and make a disclosure requirement where you would have to start disclosing what your who the ultimate owners are of all of these companies. So no more of these sort of privacy, LLC over LLC or trusts or privacy trusts or anything like this. This is something that the government wants to know exactly for every single entity that's created here in the U.S., filed in the U.S. They want to know who are the owners, who's in control, who are really the people behind the curtain, so they can make sure they're not into any nefarious activities.
Well, and some of that makes sense, right? I mean, they point specifically to money that has been moved in drug cartels and to the Ukraine and places through shell corporations and all this scary sounding stuff. But really part of asset protection and privacy is to set up your structure in such a way that you have some privacy. It bleeds over here to the banks and people who are transferring money. And I think most business people are above board. They aren't trying to do anything that's not legal. They're just trying to follow protocol and so forth. So I think perhaps we start with, let's assume the intent's good. Now, I might have lost some people right there because they might say, no, anything by the government that's trying to limit privacy isn't good. But just that's at least the narrative about why this is important. Yeah. And yet it is going to affect all of us, because if you have an entity and you meet the criteria that Mauricio is going to share with us, then now there are some new things you're going to have to do. So let's talk about that part of it, Mauricio. Not everybody involved in an LLC or a corporation or a limited partnership is affected by this, but what I might call the primary stakeholders are.
Yeah, so I've actually broken this sort of, I thought of the way I organized this in my brain, I kind of broke it down into 4 segments. Like, so who needs to file is kind of like the first layer of analysis that we want to go into. What needs to be filed, right? So who needs to file, what needs to be filed, when does this need to be filed, right? And then what are the consequences or penalties if you don't file them, right?
Okay.
And so you kind of went right for the number 1, which is who needs to file, who is the one that is obligated to comply with this governmental request, which, by the way, is through a governmental agency called FinCEN, which is the Financial Crimes Enforcement Network. That's the arm of the government that is meant to, protect against anti-money laundering and all this stuff. And so when it comes to who, there's actually 3 types of people or 3 types of organizations that need to comply with this. So number 1 is going to be what we call the reporting company, right? And the reporting company is any entity, so an LLC, corporation, limited partnership, anything that's been filed with a Secretary of State, that's actually been formed in the United States, that is going to be considered a reporting company. There are several exemptions to that. There's, I think, 32 of them. None of them are really going to apply to most of what we and I do. The only one that you might fall into is if you have a large company, over 20 employees, $5 million in revenue, then you might be exempt because you're a large corporation or a large entity. But the vast majority of us real estate investors who are, own individual properties in our own LLCs, most of us don't have any employees, let alone 20. And but a reporting company then is basically any LLC, any LP, any corporation, any S Corp that you filed. And what we need to do there is we need to report the name of the LLC, obviously, and any doing business as, any DBA. We need to report the business address, which again makes sense. These are not big ones. The state of formation of where this company is, and then they call it a unique identifying number. So typically that'll be like the EIN, right? The employer identification number that you get to open bank accounts. Maybe it's the entity number that shows up on your articles of organization, some unique identifier that you want to do. So that's sort of the first layer. That's sort of the base layer of who needs to report, is any kind of company that is filed. So for example, a trust, which is an interesting thing because I'm starting to think through this. A trust, because it's not formed anywhere, you don't actually file for the formation of a trust. It's just an internal document. They are exempt. So if you, for example, hold your real estate in land trusts, for example, well, a land trust would not be a reporting company. Or if you have your living trust for estate planning purposes, that would not be a reporting company. Or even an asset protection trust that isn't filed anywhere. So those are some of the things that are not reported. And so that's got my mind going and see if there's some strategies we can implement, especially with land trusts, and see if that's something we could do. But for now, if it's filed in the US, then you are a reporting company.
Okay, so we kind of have our idea about who has to report, but what is it that we're reporting? Reporting a substantial ownership in an entity or material participation, I guess, of some kind.
Yeah, so that's the second one. So the first one is the reporting. And so the reporting company, just what I mentioned, is what needs to follow. But in addition to that, the beneficial owner of the reporting company, and the definition of a beneficial owner is anybody who owns 25% or more of the particular entity, right? If you're a member of an LLC or a shareholder in a corporation that you own 25%, or anybody that has what's called, quote unquote, substantial control over that entity. And substantial control is a very broadly defined term. For our purposes, it obviously means the manager of the LLC or the president of the company or the board of directors or the general partner, but also anybody who has, voting rights. So you may only own 10% of the company, but if you have a 51% voting block and therefore you have the ability to fire and hire the manager and ultimately control what the company's doing, then that's also going to be considered a beneficial owner. So that's sort of the second type. So we have the reporting company itself, any of the beneficial owners, which is ownership and or control. And then the third type, which is really it affects folks like myself and other companies that actually file these entities, is that the applicant, meaning the person who files the LLC or the corporation, is also a company. So, for example, when we at our law firm at Premier Law Group, when we file an entity with the Secretary of State and we show up as the organizer of that entity, we are also required to report all this information. And when it becomes an individual, in terms of, well, let's get to what they need to do. But so that's kind of who needs to do. What they need to file is going to depend on the individual. So if you're an individual, it gets a little bit onerous. So here's what you need to do as the individual. You need to put your obviously your legal name. You need to report that. You need to report your home address, not a PO box, not a business address, but your home residential address. You have to report your date of birth, and you have to report, again, a unique identifying number, which in this case is usually going to be your driver's license number or your passport number. And then finally, you need to provide them with a copy of that document. So a copy of your driver's license or a copy of your passport. And that all needs to be provided to FinCEN via a portal that is to be determined. There's a portal called BOSS, which stands for Beneficial Ownership Secure System, which is where we're going to be uploading all of this information and paperwork. But as of today, which is about almost a month and a half out of having to report this, that has not been set up and is not operational yet.
So this is set to take place on January 1st, 2024. That is when it starts. And it is retroactive, meaning if you've already got an entity, it was formed 2, 3, 4 years ago, you are going to have to make this report. And moving forward, anyone that forms a new entity that is subject to the requirements you talked about is also going to have to report it to FinCEN. Is that correct?
Yeah. So what happens is January 1st, to your point, which by the way, it's already been extended. It was going to be 2023, January 1st of 2023, and it got kicked another year because I think people weren't ready for it. So starting January 1st, 2024, we're basically separating two types of entities. One are all of the entities that have been previously created. So if you have an entity that you created 10 years ago, 5 years ago, 20 years ago, whatever, those are going to be required to provide the exact same information that I'm describing. However, you do have 1 year from January 1st to comply with that request, right? So you're going to have to go back and look at all the prior entities you have. If you have entities that you're not using anymore, that you've kind of thought, hey, these have been dissolved, I don't really care about them, then make sure they're officially closed down and dismissed, because if they're up and running, even though you're not using them, you're going to have that requirement. And then for any entity that you file January 1st moving forward, right now you're going to have 30 days to get this information to FinCEN, although there has already been a proposal to extend that to 90, and the proposal is from FinCEN themselves. So to be honest with you, I'm not sure how their internal operations work, but my guess is it's going to be extended to 90 days because it is their proposal. And to be honest with you, I'm not even sure they're going to have their act together come the first week of January. So new companies, you're going to have to file within, let's call it 90 days. I think it's going to be 90 days by the time you get there, all that information. For anything prior to January 1st, you've got 1 year to make sure that you're compliant. The good news for us as applicants or organizers is that we are not on the hook legally for anything that happened prior to January 1st. So I'm not required to go back and make sure that clients that I helped 10, 15 years ago go back and figure out, are they filing everything legally? But starting January 1st, any entities that we create, I'm going to be on the hook if for some reason we aren't able to get the information to the government with FinCEN, or there's a misrepresentation and all that stuff. And the penalties are quite severe. And so it's causing a little bit of a chilling effect, because applicants, I've talked to many of our colleagues, they're not going to be filing any of these entities until they get all this information. So because if they file the information, then suddenly, Robert, you don't want to give me your driver's license for some reason, or you don't want to give me your home address, I'm legally liable for the fines and penalties of those things. And so we're not going to file anything until we have all of that information in hand. Then we'll file and provide that information on behalf of clients.
I don't think people should be too surprised about this based on what's going on in the world. For many years, it's been a requirement that if you have signature authority over a bank account outside of the United States, you have to report that. And you have to report that with a simple online form once a year. And that's been going on for a long time. So those a little different, because it's my understanding that you only have to file once unless the information changes. This isn't an annual report. It's just like the one time I'm going to let the government know, hey, here's my entity. Here are the people that are the substantial shareholders.
Yep. And so you have 30 days from any material change. So if you have an LLC and suddenly you bring in another manager, and now you have a co-manager and they become now a beneficial owner, you have an obligation to update that information. Or maybe somebody leaves your company and therefore you become going from a 23% owner to 27% owner, that kicks you in there. So you do have an affirmative requirement to update that. The good news for us, again, in terms of our liability, unless it's willful on our part, we're going to be okay in terms of, I have no control, right, Rob? But we set up an LLC for you, and then you suddenly something happens years later, how are you going to tell me that, what if you don't tell me that change is made? So it has to be a willful denial on our part. So that makes me feel a little bit better, but there is an ongoing obligation. So there's a lot of best practices that you can obviously set into your process to make sure that that you're covered, or at least that if you're not covered, you can show that it wasn't willful.
Well, especially moving forward, right? As I'm thinking about entities I might create for properties or businesses, this is just another, checklist item. Make sure that I filed this within the appropriate amount of time. But I think let's talk through the rubber meeting the road obligations that folks listening may have. So imagine that 10 years ago you bought a property and you put it in an LLC and it had two members, maybe you and your spouse. Okay, well, that is your property, but technically it's owned by an LLC. So that's the kind of arrangement where you have two partners. Imagine it's 50-50, so each person has at least the 25% ownership that you would have to file with FinCEN for 2024, with the deadline being actually the end of 2024, but it becomes a requirement January 1st. So if I have a dozen of those types of entities with 2 or 3 different partners, all of whom have 25% or more, they're all going to be on the hook for this.
Correct. And then it gets even more complicated when you have layers, right? So your example was a very great one, a simple one. Hey, I've got a property, there's 2 owners and we own that personally, that's fine. But what if your property LLC is owned by a holding company, for example, or some other LLC that's then maybe owned by your living trust? And then, and then you start getting those layers. That's where it gets a little bit more complicated because you got to keep following the trail. And even though you may not have to require, for example, the beneficial owner might be a trust. And so the trust, you don't have to report the trust. But if you have control over the trust, then you would have to, so it gets a little bit interesting, to say the least, and trying to figure out how deep and how in depth you have to go through the analysis to figure out who needs to be. Look, at the end of the day, it's just more compliance, which means more costs and more headaches and all that fun stuff.
So I have a hypothetical for you, Mauricio, and you may not know the answer, but imagine I have an entity with 4 other partners. There's 5 of us, and we're each 20% owners. Now, that's actually not hypothetical. I have that exact situation. Who is it that you would think needs to be on this report?
Well, sure. So the beneficial owner would be anybody who's 25% or more owner. So you just mentioned there's 5 owners at 20%, so none of them would qualify there. So then we'd have to go to the substantial control. So this LLC obviously has a manager, and it by law has to have a manager. So if the managers are individuals, then clearly they are, fall into this beneficial ownership category. And if the manager is an LLC, well, then the LLC is going to be the beneficial owner. So we've got to give the information about that. And then whoever controls or has substantial control of the management company. So there's really no way to get around it unless you really, honestly, I've just thought of this the last couple of days, is through sort of trust structures. But unfortunately, land trusts, which are probably the most popular trusts that people use for owning real estate, which is for the exact same reason of having privacy, even though the land trusts are not reportable, they also don't have any asset protection value. And so typically, in order to get the asset protection value, you create an LLC to become the beneficiary. And there you go. You've just created an entity and that's been filed somewhere. And so now that has a reporting requirement for that LLC that you set up as a beneficiary of the trust.
Well, I'm glad you bring that up because folks do have sometimes complicated entity structure, and they might originally think, oh, no, there's 10 of us and we each have 10%, so we're exempt. Except no, somebody has to have that control and somebody has to be on the hook for it, and people may own with different entities and so forth. So I think your homework is, if you have these entities, to really get out the paperwork and think through and who's there. There are complications, right? Because if you do have a holding company and its percentages and it's got to be reported, and then it's now a member or the managing member of another LLC. So, just You got some time here. Just take them one at a time and figure that out. Mauricio, a lot of our listeners are either passive members of a real estate syndication or private placement, or they're syndicators, folks that are putting together deals. They might raise $2 million from 20 different investors at $100,000 each, in which case those are typically limited partners and they don't sign on loan documents. They clearly don't own more than 25%. The manager, the person who put the deal together, and again, depending on the legal structure, is probably definitely on the hook for this. But do you see a situation where you might have to get passive investors involved?
Yeah, no, I've gone through that analysis. So, from a pure ownership standpoint, sure, if one of the limited partners owns more than 25%, obviously, and maybe if it's a smaller deal and they're bringing in a substantial amount of money, maybe that's possible. But then also triggers a bunch of other requirements. Usually the lender wants to underwrite you, and there's all kinds of other things. So usually we don't see LPs owning 25% or more. And to be fair, we usually don't see sponsors or syndicators owning 25% or more because their splits are usually 80-20. So the investors as a whole will own 70 or 80%, and the sponsors will own as a whole 20 or 30. And so most of the time, even multiple sponsors are not going to qualify under the ownership piece. But again, somebody has to have substantial control of that syndication, and that's going to be on the management side. So the focus is going to be on the management side. Who is the manager, or who is the manager of the manager? And there's usually, if it's more than a couple of sponsors, you're probably going to see 2 or 3 people who are co-managing. Those are going to be what's considered the beneficial owners. And that's kind of how it's going to work. I doubt if you've got 7 sponsors and only 2 of them are managing, then the 2 that are managing are going to be the ones that have to report.
We're talking about the Corporate Transparency Act and what it means to you as a real estate investor, company owner, or syndicator. We'll continue our conversation with attorney Mauricio Rauld, and we'll play real estate trivia next. You're tuned to the Real Estate Guys radio show. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Real Estate Guys listeners, are you tired of losing real estate deals due to financing issues? Have you had enough of waiting on banks, lenders, and investor groups to fund new projects? What if there were a way to eliminate all the hassle and invest in real estate on your own terms? I'm here to tell you there is. Patrick Donahoe here from Paradigm Life. I'm an Investopedia Top 100 Most Influential Financial Advisor, and I recently wrote a best-selling book about the financial strategy that changed my entire investment model, and the one that could change yours. To get a copy of my book for free and learn how you can maximize your real estate portfolio by acting as your own bank, send an email to mybank@realestateguysradio.com. Don't make another real estate deal without reading my book first. Email mybank@realestateguysradio.com now to get your copy for free.
If you've been listening to the Real Estate Guys for a while, then you've heard about the legendary Investor Summit. Simply put, it's the highest level event we do. And the content, faculty, and attendees are amazing. If you're serious about taking your real estate investing to the next level, consider joining us. You'll spend more than a week with like-minded investors, world-class educators, and real-world professionals, and you'll have a blast. It all takes place next summer, so to get the details before they're released to the general public, send an email to summit@realestateguysradio.com with the subject Summit 2024. We'll add you to the advance notice list, and you'll be invited to spend a fun-filled week learning and networking with more than 25 class sessions and breakouts, plus small format roundtable discussions, great dinner conversations, and a ton of fun. Send an email to summit@realestateguysradio.com with the subject Summit 2024 and be among the first to get the details to join the Real Estate Guys and an all-star faculty on the 22nd Annual Investor Summit.
Hi, this is Kevin Harrington, an original shark from the hit TV show Shark Tank, and you're listening to the Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you lack absolute clarity in your life and you're not sure what to do next or how, then come on out to the 2024 Goals Retreat. It's called Create Your Future. It happens the second weekend of the new year in Dallas, Texas. Life is not a dress rehearsal. Let's make sure you get it right. Get all the details at goalsretreat.com. That's goalsretreat.com. We're talking today about the ramifications of the Corporate Transparency Act that will take place at the beginning of the year. with attorney Mauricio Rauld. Before we get back to that interview, it's time to play Real Estate Trivia, your chance to win a prize by knowing today's Real Estate Trivia question. When you hear the question, think you might know the answer, send your best guess to us at trivia@realestateguysradio.com, trivia@realestateguysradio.com. Give us your name, the answer to the question, and your physical mailing address. The first person that gets it right is going to get an awesome best-selling book by Tom Wheelwright called Tax-Free Wealth. That can be yours if you know today's real estate trivia question. Last week, we were at the Money Show in Las Vegas, and we asked this: which U.S. state holds the record for the greatest number of layers in a layer cake? Well, the answer is Arkansas. Yep, in Springdale, Arkansas, one talented baker, Jane Parenti, pulled off 230 layers for an event that took place at the Springdale Country Club. That is a lot of cake. Well, instead of layers, let's talk lawyers and layers of bureaucracy. Here's our real estate trivia question for this week. Which is the most regulated state in America? Yeah, there's a lot of laws on the books in the United States, but there is one state in particular that is especially onerous in this regard. And we know which state it is for last year, 2022. If you think you know, send your best guess to trivia@realestateguysradio.com. Send us your name, your guess, and your physical mailing address. The first person that gets it right gets Tax-Free Wealth by CPA Tom Wheelwright. That's today's real estate trivia question. We're talking about the Corporate Transparency Act and the provisions that take effect January 1st, 2024. And we're with securities attorney Mauricio Rauld. Mauricio, earlier you talked about, creative ways to quote-unquote get around this, which of course would be only if they're completely legal and transparent. We're never going to teach anything that is not above the board. But I'm not sure that that's even worth spending a lot of time on. Being in a position where we often report to different groups, different stakeholders, different folks, the biggest thing is to make sure you're compliant. And you talk about this a lot. My concern would be somebody's got a rental house they bought 15 years ago. They bought it in a partnership with their brother-in-law. They formed an LLC, and frankly, they don't really think about it. They just have a property manager, and the net rent proceeds come in and get distributed. You mentioned the penalties before, so let's talk about that. What happens if for some reason I just didn't know this happened, didn't think about it? It's a 15-year-old entity, and I don't file.
That's a great point about the old entities. A lot of people may just not know about it. So the penalties can vary. Let's start with really severe to the most likely. There are criminal penalties up to $10,000 in fines and 2 years in prison. That's kind of the worst case scenario.
Ouch.
But that is reserved for people who are knowingly and intentionally failing to report, right? Those are, again, criminal. But for the rest of us, it's still significant. It's still $500 per day per violation. It's very similar to the international stuff you tell us. Obviously, the international is a little bit more onerous. I think the penalties, are $10,000 per day but these are still $500 per day, which is obviously a significant. I think it still caps at 10. But if you knowingly fail to do that, that now goes up to $250,000 maximum and up to 5 years imprisonment. So it's a pretty, this is these guys are serious. They came to play, and they're really, I don't know if they're going to be waiving anything at the beginning. I hadn't thought of that, Robert, but you're right. If you created these entities and you've had these properties for 10, 15, 20 years, you're not really paying attention. You're not on my mailing list, and so you don't get my emails. What if you just don't know? And it's going to be interesting to see how many of those fall. I think that's one of the reasons they extended this actually for a year, because of that scenario. But, we're going to be sending emails out. We've created, since I've been doing it for probably over 1,000 entities that I've just personally, my name is probably on 1,000 entities plus out there roaming around. And so we're tracking those down. We're going to send a courtesy notice to everyone, just letting them know about the existence. And if they'd like us to help, great. If not, you can handle it on your own. But there's ignorance of the law is not an excuse. So just because you didn't know about it doesn't mean you're not going to fall in this net.
Well, I can imagine that the sheer volume starting out is going to be high. They estimate there's tens of millions of entities, and then every year another 5 or 6 or 7 million are formed. Mm-hmm. And it's my understanding that there's no cost to file. So it's not, they're trying to make, $50 an entity or whatever. But as the government often does, if you read tax forms, they always tell you how many hours and minutes it is likely to take to prepare. They've estimated that it's going to take the average person or company about $100 to comply, meaning just the work you're going to have to do to pay someone to pull the documents up and just all the things, right? So it's going to take some work, but it is that ounce of prevention. And I think when we're talking about anything where you have to be compliant with a rule or regulation or a law, you don't want to mess around. You want to get it done.
That's right. And that's why, I've called around and, all of the companies that file these, or so whoever, I would actually connect with the person, whoever filed the entity originally for you, reach out to their company and just say, hey, can you do this for me? And there's going to be a charge for sure. The going rate that I've heard from different companies is probably in that $200 to $250 range if it's a pretty simple one. The challenge is when you get layer to layer to layer to layer, that might be a lot more work. So I think it might be an hourly on top of that. So it is going to be a compliance cost. And I think it's, especially for syndicators, here's my big, we have a lot of syndicator clients. It's going to cause delays because, again, these companies and even our firm, that we're not going to file the entities until we have all this information. And sometimes it's like herding cats. The client you're speaking with got it, but they've got partners and maybe they're on a trip and you can't get a hold of them. And, they're not quite sure who should I put down as the owner. They could create delays. And because of the liability for us, there's just no way we can file these things without having all that information already in book so that we're confident that we can go ahead and comply ourselves. Otherwise, we're going to be on the hook for, $500 a day and, up to, all these criminal penalties as well if we knowingly don't comply. But I think the other things that I'm still working through all of this stuff is just some of the safeguards that people can take. Because you can think of this scenario. You've got a business, right? And so you have 3 or 4 business owners and, they don't want to comply. Right. Like hey guys, we've got to do this. And suddenly the other guy's like, I don't want to give him my home address. There's no way I'm going to give him my home. I'm going to give him this address, or I don't want to give him my driver's license or whatever. If there's some issue there, you need to, as a business owner, you need to protect yourself, have some language in the operating agreements and just say, hey, this is a requirement. And if you don't do it, you indemnify us or hold us harmless, or, hey, it's not our fault. Because I can definitely see scenarios where people don't understand or don't want to provide, or they try and not, especially on the home address. A lot of people are very privacy conscious and they don't want to give out their home address. And so they may want to try and give out a different address. And, as co-partners, you want to just be careful and make sure you put some safeguards so that nobody can accuse you of willfully or intentionally not reporting these information and these changes.
Definitely some landmines in this deal. Imagine that 10-year-old LLC with 15 partners and you're the manager and you've been sending out K1s, updates, and you're getting no one at this address return, and you don't have a current address and you can't reach the person, and yet, the money's making it to their bank account. It's just a 1,000 different scenarios where it might be tough. Yeah. You have people that got into a deal or a business together who now aren't talking.
That's right.
Or have restraining orders. It's just all those kinds of things. And then I'm thinking about, you do a syndication, you raise some capital, say I got 10 members and everything goes along great for 4 years. And finally a guy says, hey, I've had a situation in my life and I found someone to take my place. Can they come in and take my ownership percentage? And as the syndicator, you might say, yeah, sure, let's check our documents. We can do that. Let's do that. Well, you might not realize that just triggered an update requirement for this.
That's right. Yeah, there's a lot of landmines, which is why I think this is going to become a little cottage industry in and of itself. There's always somebody that's going to come up and this is a problem, right? And so there's going to be people that are going to come to the marketplace with a solution, and we're one of those folks that are going to try our best to sort of make this as a painless process as possible for people to get through all this compliance.
All right. Well, this has been, I will say it's a great update. I'm not sure it's necessarily great news. There are certainly some concerns about what happens to this body of information. Can you speak to that? If I report this, does that mean it's somehow publicly available, or what happens to all the details about my entities?
Yeah. So this is something very similar to your tax returns. This is meant to stay with the government. So this is not publicly available information. This is meant for the financial crimes enforcement and the law enforcement and the governments. And most likely the banks will also require it as kind of your customer, but they won't be able to access that without your permission. So they're going to need your permission, but you're obviously going to want to be able to open a bank account. So you're going to give them your permission. But it's not like Joe Blow off the street. You get into a car accident and they're trying to snoop around and see what assets you have, that somehow they can access this information, at least not in theory. who knows, how far that goes. But in theory, anyway, this is it's limited to the government agencies only.
All right. Well, we've covered a lot today, and let's make sure you have the salient points. Mauricio's put together a quick little report that you can access if you'll just send an email to transparency@realestateguysradio.com. Transparency@realestateguysradio.com. Make sure you have the high points so you know what you need to do. Hey, before I let you out of here, Mauricio, coming up in March, we have the Secrets of Successful Syndication. That's an opportunity for folks to learn about putting together bigger deals that involve more people. Tell us what you're going to be covering at that event.
Well, we cover everything. We do a nice little overview of really, the contextual parts that just, what is a security, why you need to comply with federal and state securities laws, and we walk you through all the requirements and the exemptions. And I like to think I put it into sort of really simple terms for everyone. So a lot of people leave that seminar just saying, wow, I just finally understand sort of how big picture it works. Obviously, you don't need to know all the details, but big picture, you get the contextual thing. And it's obviously an amazing event. Been, I think, to every single one except for one for the past, 10. It's been a decade now that we've been doing it, huh?
It has. Did the first one back in 2011. Yeah. And for the last many, many years, it's twice a year. If you want more information, just go to the website, realestateguysradio.com, and you'll see events. Those are some of the events that we produce, some events that we speak at, and you'll see the secrets of successful syndication. Well, as always, Mauricio, we appreciate you keeping us up to date, and thanks for being on the program today.
Well, thanks for having me. Always a lot of fun. Thank you, Robert.
There's Mauricio Rauld. The Corporate Transparency Act may not be a lot of fun, but it's a way to comply, and you would much rather be on the right side of complying with information requests from the government and not try to hide anything. You're tuned to the Real Estate Guys radio program. More when we come back. I'm your host, Robert Helms.
Real estate investment advice right in your mailbox. Sign up for the free Real Estate Guys newsletter at realestateguysradio.com.
With everything going on in the world, don't let your lack of financial understanding derail your investments. Real estate investors need to see the bigger economic picture. The Federal Reserve, bonds and interest rates, precious metals, oil and gas, cryptocurrency, and the inner workings of monetary policy, just a start. If you're at all confused about how and why market metrics intersect and what it means to you as a real estate investor, take your understanding to a new level with the Future of Money and Wealth video collection. Discover the opportunity to hedge against inflation, deflation, and stagflation. Gain critical insights on real estate niches that perform well in challenging times, and learn specific strategies to fortify your balance sheet before it's too late. Simply send an email to future@realestateguysradio.com for all the details. The Future of Money and Wealth includes 20 videos of powerful presentations and panel discussions featuring Robert Kiyosaki, Peter Schiff, G. Edward Griffin, Dr. Doug Duncan, Simon Black, CPA Tom Wheelwright, Brian London, Dr. Chris Martinson, and many more. Email future@realestateguysradio.com today.
Are you achieving everything you want in life? What if there was a time-tested way for you to get everything you've ever dreamed of? The most successful people in life set goals and keep themselves accountable. But how? The good news is that it's not rocket science. You too can learn the skills and unleash the motivation that will create success in your life. Hi, this is Robert Helms, and I'd like to personally invite you to attend Create Your Future, the 2024 Goals Retreat, January 12th to 14th in Dallas, Texas. This unique weekend event has been called phenomenal, inspirational, and life-changing by the thousands of people that have attended. Hear from some of them and find out more at goalsretreat.com. Get your life back on track, physically, spiritually, and financially. Attend the 2024 Goals Retreat on the second weekend of the new year. Visit goalsretreat.com to learn more and get on the advance notice list. This is no dress rehearsal. Live the life you were meant to. Visit goalsretreat.com or call 888-489-7723 extension 18. That's goalsretreat.com.
Hi, this is Dennis Waitley, and you're listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. If you want to have a better 2024 than you've had a 2023, then come join us for the Goals Retreat. Create Your Future happens the second weekend of the new year in Dallas, Texas. You can get all the details at goalsretreat.com. Well, that was enlightening for sure. Maybe not good news, but better to have it and know what you have to do to comply with the Corporate Transparency Act.
Well, first of all, kudos for listening to the show. Maybe not always the most interesting topic, but just like you talked about the goals retreat in life, when you drive across town, you need to make course corrections along the way. Circumstances change. Sometimes you think you're going to get a green light, you get a red light. Sometimes you get there and there's a detour, there's road construction. And so in this case, as you're traveling down the road of building your wealth and organizing your entities and your asset protection structure and whatnot, especially if you're a syndicator. If you're a syndicator, you're dealing with a lot of entities.
Right.
And if you're doing it right, in my opinion, you probably have public or visible entities that you do forward-facing business with, and then you have a network of private entities because you tend to be a little bit of a target. And so now these things are changing, and so anywhere in your life when you need to make course corrections, especially in things that are technical like tax and law, that's where you draw upon your advisors, and you don't even know to be aware unless you're paying attention. So we talk all the time about how these black swan events or these changes, a bend in the road isn't the end of the road, unless you fail to make the turn. And sometimes the rules change, and if you're not paying attention, you end up on the wrong end of the rules. So make sure that if this affects you, that you spend a little bit of time and money and dig deep and find out what's going on. I know we're going to be bringing a lot of information to the members of our Syndication Mentoring Club because they deal with a lot of entities. And I'm guessing there's several people out there listening to the show right now that are in that same camp.
Well, big thanks to Mauricio Rauld for bringing us up to speed with the Corporate Transparency Act. It's not really great news, but it's news you need to know. But let's bring you some great news since you've made it this way through to the show. And look who's just popped in our studio. It's the apartment king, Brad Sumrock. Hey, Brad.
Hey, Robert. Nice to be on today.
Yeah, it's good to have you. I know you're getting ready for this weekend's event, and we're just right before it, but it's going to be awesome. It's a weekend of wealth, and this is a little different. Folks that have listened to our show and heard you before talked about your apartment trainings, and you have a lot of the events like we just did AIM NatCon a few months ago with lots of speakers. This event's really different, and it's really for folks that want to get into the nitty-gritty when it comes to apartment investing.
Yeah, and what makes it different is, number one, the size of the event is extremely intimate. So as you know, Robert, we've had 500, 600, 700 people at our AIM NatCons and Rat Race to Retirement events. This event is going to have less than 70 people in person. And what that means is they're going to get a much more intimate experience, and it's going to be taught 100% by me. So there's no guest speakers. It kind of reminds me of like the first events that I did, over a decade ago, and was able to be personally working with every single person. And what we're going to do is I'm going to walk them through the 4-step apartment investor framework, the same framework that I've used for all of my deals and all my students have used for the hundreds and hundreds of deals that we've done over the past decade. So I'm going to be walking them through that. But because of the size of the group, we're going to be able to go at a pace that's going to allow Q&A and, discussion points on each of the 4 steps of the framework. And we're just not able to do that in a room of like 600 or 700 people. And then we're also going to have everybody attending in person have access to the Sumrock Property Analyzer. And we will actually use that property analyzer and we will analyze deals. Because look, there's a great opportunity right here and coming into 2024 with the market conditions have changed. Costs have gone up, interest rates have gone up, but there's a lot of deals where sellers need to get out. And so now more than ever, it's important that people know these skills if they want to be able to buy real estate at a discount. And things are at a discount. I mean, we're like 30% down from peak pricing. And so it's a great time to be buying quality assets in quality neighborhoods at a price point that I haven't seen since like 2017. or 2018.
But you hit on the key, which is you really do have to underwrite these deals and make sure that with the interest rates today and everything else that they're going to pencil. And that's what I love about this concept is you going through that analyzer with folks in real time so that everybody understands it. You take questions. It's like the good old workshop days.
Exactly. And that's exactly what it is. It's an intimate workshop. And this is for somebody that really wants to learn how to, walk through a proven framework of buying apartment buildings and then learning how to, and that framework includes finding the deals. And then once you find them, analyzing them. So if you want to learn how to find the deals and analyze deals and then go into a deep dive on day 2 on analyzing deals, which to be quite honest is something I have never done in a public training like this. I've only done it for people in our 1-year mentorship programs at a much higher investment. And so we're going to go down deep and analyze the deals. And we're going to talk about vetting property management companies and give them a system for how to vet property management companies, because now more than ever, property management matters.
So it sounds like whether you're relatively new to the idea of investing in apartments or you've been doing it in a while and you just want to refine a little bit and understand not only Brad's framework, but the analysis software that he uses, it's going to be a great event. It's coming right up this weekend. So if you are listening live on the podcast, then you have a chance to get there by sending an email to weekend2wealth. That's weekend, the number 2, wealth, at realestateguysradio.com. You'll get all the details and link to sign up. You go hang out with Brad Sumrock and learn the apartment business. Great to have you stop by today, Brad. I know it's a quick mention, but I wanted to make sure that folks had a chance to get to this event.
Hey, thanks for having me on, Robert. It's going to be a great event, and I look forward to doing some future episodes with you. I always love being on the show. And just love your listeners.
There's the Apartment King, Brad Sumrock. If you'd like to attend Weekend to Wealth, it's coming up November 18th and 19th in Dallas, Texas. Get all the details by sending an email to weekend2wealth at realestateguysradio.com. That's weekend, the number 2, wealth at realestateguysradio.com. Big thanks to attorney Mauricio Rauld for bringing us up to speed with the Corporate Transparency Act. Your mission as an investor or business owner is to make sure you're compliant, and you have some time to get that done. But don't wait. Get it figured out now while you're thinking about it. By the way, we do have some breaking news here at the Real Estate Guys. After being the only faculty member to join us virtually for a couple of our recent investor summits, we're thrilled to announce that legendary investor and prolific economic podcaster Peter Schiff will be back sailing with us live in 2024 for the 22nd Annual Investor Summit at Sea. We're leaving for Fort Lauderdale, and we're going to head to Aruba, Bonaire, and Curacao, plus lots of time at sea to get to know your fellow summiteers and our all-star faculty. You can get all the details on our website at realestateguysradio.com. Click on the button that says Summit. Hey, next week we'll talk to an extraordinary gentleman who hasn't been on our show in more than a dozen years. You're going to dig that interview. Until then, go out and make some equity happen.
This episode of the Real Estate Guys radio show is brought to you by Paradigm Life. Powerful cash management strategies using life insurance. Learn more at beyourbank.com. Mid-South Home Buyers. Low-cost, turnkey cash flow properties in Memphis, Tennessee. Corporate Direct. Asset protection strategies for real estate investors from attorney and rich dad advisor Garrett Sutton. Find these and other great companies under the Resources tab at realestateguysradio.com. To learn how you can expose your product or service to the Real Estate Guys audience, call 888-489-7723 extension 4. That's 888-489-7723 extension 4. Or use the feedback page at realestateguysradio.com. Thanks for listening, and we'll see you next week right here on the Real Estate Guys Radio Show.